Good afternoon, everyone. Thank you for joining to the earnings call of Zee Learn Limited. On behalf of Edelweiss Broking, I would like to welcome the management team of Zee Learn Limited to discuss the results and outlook post Q1 FY19 earnings. We have with us Mr. Dev Shankar Mukhopadhyay, CEO of the company, Mr. Umesh Pradhan, Chief Financial Officer, Mr. Subodh Khanna, AVP Finance, and Mr. Siddharth Acharya, Senior Manager, Investor Relations. I would now request Mr. Mukhopadhyay for his opening remark, post which we can open the floor for Q&A. Over to you, sir.
Thank you, Praveen. Good afternoon, everyone. This is Siddharth Acharya here. Thank you for joining us today. This conference call has been organized to update our investors on the company and its performance on Q1 FY 2019. We hope that you have had a chance to go through the company's result, which is uploaded on the company's website, www.zeelearn.com. Glad to inform you all that we have Mr. Ajay Kumar, Director, Mr. Dev Shankar Mukhopadhyay, CEO, Mr. Umesh Pradhan, CFO, Zee Learn, and Mr. Sandesh Nayak, CFO, MT Educare, on this call today. We will start with a brief note from Mr. Kumar. We would like to remind everybody that this call is purely for our investors and analysts, and anything that we say which relates to our future outlook should be taken in the context of the risk we take. Thank you. I will now hand over the call to Mr. Ajay Kumar. Over to you, sir.
Hello, everyone. This is Ajay here. So I'm happy to welcome you to this quarterly investor call. And obviously, you must have seen the results by now, and I hope those results were up to your expectations. So there are three key things in the result. First of all, Zee Learn, as you have seen in the last 10 to 12 quarters, has consistently performed well, and you see growth to the extent of about 25 to 30%, both on top line and bottom line. And we hope that the momentum will continue. For the second part, last year for Mahesh Tutorial was not very good. However, in this first quarter, they have done a break-even and posted a small PAT of about approximately 1 crore. So which is a good news for us since Mahesh Tutorial is part of our fold now. Last but not the least, since for the last 1 month in the preceding quarter, Mahesh Tutorial results were consolidated with Zee Learn, which was accretive, and with that you see higher top line and bottom line growth. For the balance part of this call, Dave would take you over, certain key performance metrics and highlights of Zee Learn, and Umesh would give you the financial details, and thereafter we will be open to questions. And we'll take it forward from there. Thank you very much.
Thank you, Ajay. Welcome to all of you. I would like to believe that our disciplined execution, accelerating growth, and strong leadership bandwidth has helped us to increase our margin during the quarter. While we made strategic investments to leverage the opportunities in the education sector, our persistent focus on operational efficiencies of newly acquired business of MT Educare will continue. This has been successfully reflected, as highlighted by Mr. Ajay Kumar, in the consolidated Q1 Financial Year 19 results of Zee Learn Limited. Now, let me quickly give you an update of the key financial metrics. At a console level, including MT, our top line stands at 113 crores against 67.8 crores, which is up by 67%. EBITDA is at 42 crores, vis-a-vis the 26 crores for the same period last year, which is up by 62%. EBITDA margin is at 37%, vis-a-vis 38%. We have managed to maintain the margin in spite of MT consolidation. PBT is at 34 crores, vis-a-vis 19 crores for the same period of last year, up by 77%. PAT is at 24 crore versus 12.8 crore of the same period of last year, up by 87%. margin, PAT margin is up by, is 21% vis-a-vis 19% for the same period. Minority interest is 2.43 crores, and PAT stands at 21.6 crores vis-a-vis 12.8 crores, which is up by 68%. If I look at the console, excluding Mahesh Tutorials, our top line is at 82.9 crores vis-a-vis 66.9 crores, which is up by 24%. EBITDA is at 31.9 crores vis-a-vis 25.1 crores, up by 27%. EBITDA margin is at 38% vis-a-vis 37% for the same period of last year. PBT is at 25.8 CR vis-a-vis 19.3 crores, which is up by 34%. PAT at 18 crores versus 12.8 crores, which is up by 41%, and PAT margin is at 22% against 19% for the same period of last year. Those are quite impressive, top line and bottom line numbers that I've just shared. I'd also like to take this opportunity to, update you on the new initiatives that we have launched at Zee Learn. Some of it were, mentioned in the last call, and I must tell you that there are at least 7 to 8 new initiatives that we have currently undertaken at Zee Learn, and all of them have the opportunity to become much larger as we go forward. However, in the current financial year, we want to drive all those initiatives by executing a pilot. And I'll let you give an update on Qtr1 Daycare. We plan to roll this out in 100 centers in the current year. The theme being home away from home, which provides a safe, secure, and nurturing environment for every child. It's a comprehensive program aiding cognitive, social, and emotional, speech, language, fine, and gross motor skill development for the child. We plan to start this pilot in the month of October, and we expect significant impact in terms of revenue from these 100 centers. The second would be Ankuram, what we spoke about during the last call, which was mentioned as Sanskar, which has now renamed as Ankuram, given that Sanskar is already a trademark, by a television channel. So we have gone ahead and shortlisted another name, Ankuram. We plan to do a pilot across 50 such, locations across the country. By the way, these are all standalone locations. This is aimed at providing structured quality education at affordable cost in a safe and secure environment. This is designed to give students the best chance of academic success by providing well-researched, age-appropriate, and child-centered holistic curriculum. I must share that we have already done 3 sign-ups so far. One in Udaipura, which is in MP, Jamir in Maharashtra, and Shahpur in Karnataka. We plan to do a launch in the month of September with around 10 to 15 such schools. We have also taken small steps into the smart classes space, the ICT smart classes space, and the objective being to identify stable government projects with sustainable margin. Our academic strength, pedagogy, school management experiences gives us the competitive edge. So far, we have not ventured into this space, and this is the first time we plan to enter. We have already formed a partnership with another entity called Edic Solutions, and I'm glad to share that we have got the first one, which is the Agra Smart City. It's a very small project with 30 digital classrooms for an order value of 52 lakhs. There are few in the pipelines. We're already in talks at Dharamshala, Telangana, Jammu and Kashmir, and Jharkhand. for similar projects. Beyond that, let me also talk about our learning tab that we currently have. And we have moved from an hardware, moved away from an hardware route. However, that option would be available to the children. KLT, which is popularly known as KLT, will now be a mandatory part of the student kit. It would be linked to the curriculum, therefore providing better learning outcomes for the child. And it's a cheaper option compared to what we had sold previously. It is convenient as it can be installed on any Android or iOS platform. This we plan to start from the next academic year, and we are targeting 50,000 plus children in the pilot itself. Beyond this, there is one more project that we have launched, which is the wellness, the health, and we believe that obesity is a real problem among children in India, and therefore we plan to roll out a wellness program across our children, both in KTRI as well as in MLZS. We have, being a pioneer in early child education, an initiative. This initiative is aimed at spreading the awareness about health and nutrition. It's a comprehensive program encompassing pediatric, ENT, and behavioral assessment. The assessment reports will be shared, and it would also be available on our app. This project is expected to be a major revenue driver for us because given the scale and the scope. And this is also getting implemented now as I speak to you from September onwards. So there are basically four broad parameters that we are covering: general, dental, eye, and dietary. And these have to be assessed by qualified doctors. We are starting off with a pilot with 50 centers covering 5,000 children in September. And so far we have received very encouraging response. There are a couple of other things. We are also launching a parenting magazine for the network for the first time. And we believe that it is very important to also communicate effectively with the parent community, who are very important stakeholders for us. And we are working with another partners here to create that magazine for the parents. And this also has an upside in terms of revenue. Beyond this, there are a couple of other new things that we are trying out, especially in line with what was discussed in the past, that we want to deliver uniforms. We are starting off with uniforms, with online delivery of uniforms across the network. I think that's a major step forward in the way we do. We usually conventionally bring all materials into our warehouse and then we dispatch it to the respective schools. But here we want to go directly to the parents. It would be compliant and cost effective, and we expect significant operational efficiencies, benefits both in terms of top line and bottom line as we go forward on this. These are a couple of new initiatives that we have progressed significantly internally. The pilots are currently being will be executed or being executed as I speak to you, and I'm glad to take more questions around them as we move forward, and I'll be more than happy to share the outcomes as we implement those pilots on the ground. I would like to hand over to Umesh now to talk about other details. Thank you so much.
Thank you, Dev. Thank you, Dev. Good afternoon, everyone. Dev has already talked about the financial numbers at consolidated level. Therefore, instead of repeating those, I would like to take you through the parameter-wise performance of independent entities, which will enlighten the performance of the business. First, I will talk about Zee Learn standalone. The top line of Zee Learn standalone stands at 54.2 crore versus 51.7 crore, which looks as up by 5%. However, you need to consider that during the same quarter last year, we had about 3.2 crore kind of a one-time revenue, which was on account of certain centers we converted into technological centers. Therefore, there's a one-time kit that we provided to the centers. So if you exclude that, the top line growth at standalone level comes to around 12%, which is in line with our normal growth. Our standalone EBITDA stands at 22.9% versus 18.9%, which is up by 21%. EBITDA margin is 42% vis-a-vis 37%, and on a standalone basis, PBT at 23.6 crore vis-a-vis 17.9 crore, which is up by 32%. PAT at rupees 16.2 crore vis-a-vis 11.6 crore, up by 40%. And PAT margin 30% versus 22%. Now that PAT is comparative in both the years, the PAT percentage is definitely important indicator. So that talks about the ZL standalone. I will take you through the certain highlights of the businesses within Zee Learn standalone. Qtr1 revenue is grown by 5% on a superficial level. However, if you consider that one-time adjustment, the Qtr1 has grown up by about 12%. The EBITDA margin that Qtr1 is delivering is about 50% vis-a-vis around 47% same quarter last year. We had EBITDA of about 21 crore versus 18 crore last year. As far as Mount Litra Zee School is concerned, we have about 10 crore top line versus 10 crore top line last year. Again, it looks as muted, but last year we had two sign-up higher than the current year. Sign-up being a kind of a seasonal, non-dependent kind of a phenomenon. We normally cover around 15 sign-ups during the year, 15 to 18 sign-ups. So, depending upon which month it gets signed up, the revenue will get captured. The EBITDA margin for Mount Litra franchisee business stands at 30% versus 26% last year. So there's an improvement in the margins also. As far as the other businesses are concerned, now other businesses have started delivering in terms of margins also. So therefore, all across the main education vertical looks very impressive, steady, and the margins are growing. Now, if I want to come back to the independent entities and take you through, Labarium has delivered a turnover of about 19.6 crore versus 9.4 crore, growth of about 108%. The number of employees that Labarium is currently serving is 3,900 versus 2,000 during the last year. EBITDA margin is about 5% and PAT margin for Labarium is about 3.6%. As far as our receivables are concerned, at a console level, Zee console level, we have about, I can tell you on the individual basis, Zee standalone 16 crore debtors versus same period last year we have about 14 crore debtors. So debtors level is maintained. In fact, comparative to the revenues, we have very well managed the debtors. As far as DVPL is concerned, the debtors has reduced to 14 crore versus 51 crore same period last year. As far as MT debtors are concerned, the net debtors at MT as on June is at about 21 crore versus 137 crore last year. So we are very well placed in terms of the recoveries. As far as the borrowings is concerned, we have about 118 crore borrowings at Zee Learn standalone versus 108 crore same quarter last year. We have 122 crore at DVPL versus 121 crore same quarter last year. And MT borrowings as on June stands at 154 crore versus 161 crore. MT has started repaying their borrowings post-June, and there is a substantial reduction as of now. And going forward, we will also clear their borrowings as far as possible from the money that got infused into MTNL as a primary from Federal. Now I open the forum for question and answers. Anybody who would like to ask questions, they are welcome, and we will give answer.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Participants are requested to use handsets while asking a question. Participants, if you have any questions, please press star and 1. We will wait for a moment while the question queue assembles. First question is from the line of Sanjay Kumar, individual investor. Please go ahead.
Hi, my question is on the standalone performance.
Name yourself, please. Would you name yourself, please?
I am Sanjay here, calling you from Noida, and I'm an individual investor. So my question is on your standalone performance and on the side of the larger school. So the revenue has been flat in spite of your 13, 15 new schools. Has the enrollment gone down per school, or what is the reason there?
Okay, so the new schools, basically in the first year, the enrollments in the new school really doesn't are on a higher side. Roughly, each school in the first year, on an average basis, gives about 100 enrollments, 100, 150. Most of the revenue on account of KIT has already been captured during the last quarter of the financial year. As far as Zee Learn is concerned, when we talk about franchises, our revenue gets captured in terms of the student kit delivery. So the new schools have already contributed their admissions in quarter 4.
But that was the same last year, same quarter, right? That would apply to the same, June 17 quarter also. The same theory would apply there also.
No, new schools contribute in the 4th quarter of the financial year. So by that way, the new schools have already contributed in the 4th quarter, which is Jan to March. So if you compare the first quarter of the last financial year, you wouldn't see that.
Okay. Would you share the number of enrollments last year versus this year? Total number of enrollments, as in total number of students studying in these schools?
Yeah. So roughly in our K-12 franchisee system, we have about 58,000 students as on date.
Yes?
58,000.
Versus last year? Versus what was it last year?
Last year it would have been around 54,000.
So there is 4,000 addition. And if you can give the same figure for the KidG?
KidG operates differently. KidG enrollments pan out till the time of December. So the enrollments comes through December. As on date, we have about 110,000 students versus 102,000 students same period last year. So there is a growth of about 8%. And, while this is a forward-looking statement, but we look forward to reach about 145 and little above 145,000 students by the end of the financial year.
Okay, that answers my question. Thank you.
Thanks, Sanjay.
Thank you. Participants, if you have any questions, please press star and 1. The next question is from the line of Amit Bagaria, individual investor. Please go ahead.
Hello.
Yes.
Good afternoon. I'd like to know if you could share specifics for the synergy benefits and cost optimizations you hope to achieve between MT Educare and Zee Learn in the current year specifically.
May I know your name, sir?
This is Amit Bagaria over here.
Okay.
Hi, Amit. This is Ajay here. First, talking about cost efficiencies. See, the general support functions like finance, HR, administration, logistics, etc., they are no-brainer, and they have already started getting integrated. So that would lead to certain savings. Coming to synergies, there are a great lot of synergies. I don't know whether you were there in the last call where I had enumerated them. However, the synergies I would like to break into two parts, one from Zee Learn perspective and one from MT perspective. So from the MT perspective, they operate self-operated models. Their centers which are there are mostly self-operated. So one opportunity for them is to learn from the Zee Learn franchising model and help that in an asset-light manner to expand their business. Second synergy for Mahesh Tutorial is that Zee Learn, through its Qtr1 and Qtr1 schools, operates in 700 to 750 cities, pan-India, whereas Mahesh Tutorial has a limited geographical spread. They would be in 7 or 8 states. So, through the reach which Zee Learn has, Mahesh Tutorial can expand pan-India. Thirdly, Zee Learn has approximately 200 business partners as franchisees. All these franchisees, their real estate, that is the schools, typically are empty after, let's say, 3 p.m. or 4 p.m. in the evening. And thereafter is when the bulk of the tutorial and test prep activities start. So many of these franchisees, if they wish, they could become partners of Mahesh Tutorial also and sweat their real estate better. And last but not the least, the benefits for Zee Learn side is that the Zee Learn students would have access to very good content curriculum of the higher classes, especially 9th, 10th, and 11th, 12th, from the Mahesh Tutorial portfolio. So I said 3 things: cost efficiencies, second, benefits for Mahesh Tutorial, third, benefits for Zee Learn. However, there is a larger picture also. Like I had mentioned in the last call, when these children come to us in Qtr1 at the age of, let's say, 2 years, we do a lot of effort to acquire these consumers. So we are acquiring the consumers, we are nurturing them for the next 15 odd years. However, only when these students are within the 4 walls of our schools, that is the time when we service them. When these students are outside the 4 walls of the school, there are many other people catering to them for ancillary services like test prep and tutorials, etc. So these are our students, but we only get a limited part of their share of wallet. So with this acquisition, we would be able to give more holistic and integrated services to the student community, making their life simpler and also spreading our consumer acquisition costs over multiple offerings and a broader revenue base. So I hope I've been able to answer your question.
Thank you. Could you also look to quantify cost savings and cost optimizations you hope to achieve this year?
No, sir. That would be a statement which this is not the right forum for me to tell you. For that, you'll have to contact our CFO and sit with him one-on-one. Because in 2 minutes, I can't tell you exactly that my finance cost will go up 5% or my admin will go down 10%. That would be not easy for me to quantify in 2 lines. But there would be significant savings, of course.
Thank you, sir. Could you share some of the performance metrics you have in mind for RoboMate? What has it achieved? Because that's a big part of the MT Educare ecosystem.
See, first of all, RoboMate is an online app. It is delivered to its customers in 2 formats. Whoever buys a test prep or tutorial package gets access to RoboMate. And then, secondly, you can also buy it on a standalone mode directly. So let's say if 100,000 or 150,000 students are studying in Mahesh Tutorial business, they would all have access. But you first need to understand what is RoboMate. RoboMate is a SaaS-based platform which is very versatile. It's not only a tool for delivering content, curriculum, etc. to the students, but it is also a testing, self-assessment, revision tool. And also, this same tool can be used to manage the various activities within an educational institution. So there are uses of this tool for the student. There are uses for this tool to the organization, etc. So right now, I don't offhand know the exact revenues of RoboMate that Umesh or Sandesh would be able to tell you. But the performance metrics for such a business should be that how many people have, registered on the web portal for this particular app. Secondly, how many have done a download of the free trial which is offered for 3 or 4 days. Then how many have actually bought it. So this is for the direct part. For the other part, obviously that is linked to the success of the face-to-face business model of Mahesh Tutorial. When someone gets access complimentary to the RoboMate app when they buy a test prep or a tutorial course from Mahesh Tutorial. And third would obviously be the B2B tie-ups that we would be doing for RoboMate with many institutions, whether for operating their institution or for servicing their students to the large other school chains and stuff.
If I may ask, sir, is the subscription to RoboMate completely monetized in the sense, or is this all free subscription?
No, it is fully monetized. Even when, let's say, you are buying engineering entrance, let's say, test prep course from Mahesh Tutorial, and let's say you pay 100 rupees, so there is an apportionment within that 100 rupees of what goes for the physical classes and what goes for RoboMate. So
what is the average...
It's not a complimentary thing, really.
Sorry, sir. What is the average fee yield on RoboMate annually?
See, for these specific questions, I suggest that you should join the Mahesh Tutorial investor call because, this is primarily a Zee Learn investor call. I wouldn't be able to give you all those small details, minute details here. So, we would be keeping a similar call for Mahesh Tutorial, where the Mahesh Tutorial people would also be there in full strength. Right now, only the Mahesh Tutorial CFO is there. Still, I will ask Umesh if he knows the numbers offhand to tell you. Just 1 second.
Hi, Amit. I think I can help you with some indicative performance parameters of MT Educare. And I'm sure you will be happy to note them. As Mr. Kumar has told, yes, there are 2 types of RoboMate revenue that we generate. One through the tutorials and the test prep that MT conducts through its classrooms. There is an apportionment of RoboMate which is offered to those students, number 1, which will be about 25 to 30% of the fees that they pay for each of those tutorials and test prep. And apart from that, we also sell RoboMate as an independent package to the students outside our classrooms. So there is a revenue which gets generated out of that, and the sale price would be roughly around 10 to 12,000 per student, per user. And I will be happy to share you that during the first quarter, we have sold, and though right now these figures are small, but those figures will indicate that there is a larger acceptance of RoboMate, and that acceptance is increasing. we have sold about 9,750 room beds outside the classroom to the independent students, which were not MT Educare students, versus 2,473 students done in the same quarter last year. So there is a increase, and we generated about 5 crore of revenue from that sale. As far as I will quickly also recap the other indicative performance of the MT Educare, which you all will be very happy to note. As far as the student enrollments are concerned, MT Educare has enrolled, give me a minute, about 46,500 students through its various verticals in this quarter, versus about 35,400 students they served during the same quarter last year. So there is a substantial increase in terms of the student enrollments in their tutorial and test prep verticals. I hope I have tried to cover.
Yes, sir. This is very, very informative. What would the residual debt now be in MT Educare, if I may ask, sir?
Roughly by now, as on date, we have cleared about 51 crore debts from MT Educare, which were standing around 176 crore when we acquired MT Educare.
So, by the end of the year, would MT Educare be clearing up all the remaining debt, or would there yet be some planned debt in MT Educare at the end of this year?
I mean, our target is to reduce the debts in MT Educare substantially and thereby save the cost. However, the reduction in debts is also connected with the one-time payments that we will be required to do as per the term sheet entered by MT Educare. So depending upon how do we negotiate with the bank, whether we get the waiver of the one-time cost, etc., we will look into that and will go forward. As and when we will progress through the quarters, we will update you. The reduction.
So, but there is no goalpost which you have in mind in terms of roughly where this debt will come to?
I mean, goalpost is to clear the entire debts, because we have infused 200 crore in MT Educare, and by that time they had about 176 crore debts. Obviously, the aim is to utilize that 200 crore substantially or largely to reduce the debts, to use certain 15 to 20 crore into working capital. So yes, there is a goalpost to reduce the debts to about 15 to 20 crore by end of the negotiation.
Oh, that sounds wonderful.
But again, as I told you, that will depend upon the how well we negotiate with the banks and whether they will be give waiver to our one-time cost. Amit, can I request now to park your questions for some time and let's give chance to others. You may ask your questions once others finish, or we can talk one-to-one.
Yes, sir. Whatever. Yes, sir. No problem.
Yeah. Thank you.
Thank you. Participants, if you have any questions, please press star and 1. Participants are requested to enter star and 1 to ask a question. The next question is from the line of Ritesh Bhagwati from Rockstead Capital. Please go ahead.
Hello, sir. Firstly, congratulations on great set of numbers. So, firstly, I would like to know, can you explain exactly what do we do in Liberium, which we have recently started, and how do we book revenues in it? So that is like my first question. Then, so if you want to go one by one, then just answer with that.
So, Ritesh, in order to save time on this call, I would request, and I have heard your name for the first time, so I would request if you could just go through our transcript of earlier calls. That will give the answer what Liberium is doing. In case you are not satisfied, you can come back to me one-on-one and I will talk to you.
Okay. And secondly, in terms of this MT Educare, so will it continue to remain separately listed? And would we need further investments to expand the MT business, or is it okay as of now?
As of now, frankly, we have acquired 60%, and immediately, as on date, there are no plans to merge MT Educare, but going forward, we can look at various options, and no further investment seems to be required to be done in MT Educare.
Okay. So lastly, on the presentation, I have seen where you have a very ambitious target for 2023. So can you just give more details as to how do you plan to achieve it, like even if it's organically? So how do you plan to achieve in terms of what kind of sign-ups are we expecting for Qtr1 or MLZC and all that?
So, Ritesh, again, for that, post our annual meet, I have interacted with various analysts and investors on a one-to-one basis, explained them on the rationale, on the targets, 2023, etc., etc. I would request just be in touch with me or my team. Let's meet once, and I will take you through independently the targets for 2022.
Sure, sir. That's it from my side.
Thank you.
Thank you. Participants, if you have any questions, please press star and 1. Participants are requested to enter star and 1 to ask a question. As there are no further questions, I now hand the conference over to management for closing comments.
Okay. Thank you. Let me take this opportunity to thank all of you for attending this call today. And I hope that the call was informative. It gave you an insight on the key initiatives that we have undertaken so far, the key rationale behind the acquisition of MT Educare, and some of the questions that was asked. Hopefully, we have been able to answer you to your satisfaction. I look forward to your continued support, and thank you very much. I wish you all the very best and look forward to connecting up with you. Happy Independence Day to all of you, and I look forward to connecting up with you, all of you, either in your individual capacity or collectively as a part of the call the next time when we organize it. Thank you very much.
Thank you.